You've probably seen the headlines. Bank of Canada cut rates. Inflation is cooling. Prices are down. But here's the big question. Has life actually gotten easier for you? Because most people I talk to say it's the opposite. It's getting harder, and not in a dramatic way, but in a quiet cutting back on essentials kind of way. Hi, my name is Deloshan, and welcome back to another episode of Real Estate Watch. And if you're new to the channel, make sure to hit that like button, subscribe, and drop your thoughts in the comments below. Now, let's get right into it. So let's look at the numbers versus reality. Take gasoline and groceries. Sure, inflation slowed, but prices didn't fall. Your bill isn't smaller. It's just stopped climbing as fast. And the price tags didn't go back down. They just froze at an expensive level. It's like losing momentum on a hill. You stop rolling further down, but you're still stuck at the bottom. And you can see it in everyday choices. People are adjusting. Families are cutting their streaming subscriptions, not because they don't want them, but because that extra $20 or $30 a month is the difference between staying on budget or dipping into credit. And RBC reported Canadians spent 2.2% less in August, the sharpest drop in months. And this happened after a rate cut. So if rate cuts are supposed to boost confidence, why are people pulling back even harder? That's because people aren't skipping luxuries, they're skipping basics: food, fuel, and daily necessities. It's not about confidence anymore, it's about affordability. And here's something to watch. The next Bank of Canada rate announcement is coming up on October 29th. And that one's going to be big, because if spending's already pulling back after a rate cut, the real question is, what can another one actually fix? Lower rates might help confidence on paper, but they won't magically make groceries, gasoline, or housing cheaper overnight. And then there is housing. Everyone's hyped about rate cuts, like affordability just came back overnight. But if you've locked in a fixed mortgage between 1.5 to 2% back in 2020, and now face a renewal at 4 to 5%, that's hundreds more every month gone. Even renters aren't safe. If landlords raise their rent at renewal, tenants end up paying hundreds more. Not for a better unit, not for an upgrade, but for the exact same place. And what about jobs? Canada lost over 65,000 jobs in August. Unemployment now at over 7%. These aren't just part-time entry-level jobs. It's professionals as well. So when career jobs vanish, people stop eating out, stop upgrading, stop spending. So when we hear inflation is cooling or prices are down, the question is, compared to when? Sure, things might look better than the absolute peak, but they're nowhere close to what life actually cost back in 2021. And we're not back to normal. We're just stuck living at a higher baseline. And this doesn't feel like a recovery. It feels like a waiting room. People are holding their breath, cutting back quietly, hoping nothing cracks. And that's the part that the data misses. The canceled gym memberships, the canceled streaming subscriptions, the quiet cutbacks. So let me ask you a question. What's the one thing in your life that still hasn't gone back to normal? Drop it in the comments, because I think way more people are in the same boat than we actually want to admit. So if you enjoyed this video, don't forget to like, subscribe, and share. Your support really means a lot. Thanks for watching, and I'll see you in the next video.